Hey all, John Ray III here. In this Podfast, we are going to simplify and explain the FTX draft plan of reorganization. This document is all about the bankruptcy plan, which is like a roadmap for how to deal with debts and liabilities during the bankruptcy process. It's like having a GPS that guides you through a complicated journey. The plan includes a summary chart that classifies and categorizes the claims and interests of the company's stakeholders. It's important to note that the draft plan has not been approved by the bankruptcy court and it's subject to change. The purpose of releasing this plan is to facilitate discussions and negotiations with the stakeholders of the company. The plan includes various sections that cover different aspects of the company's reorganization. These sections include administrative expenses and priority claims, classification and treatment of claims and interests, execution of the plan, treatment of contracts and leases, provisions governing distributions, and more. Just so you know, this 80-page document was summarized with Podfast, an AI content summary tool. In this document, there are several terms and definitions related to a bankruptcy case. Let's break them down using metaphors to make them more understandable. Imagine you're at a party with different rooms and activities. The party place is going bankrupt and needs to come up with a plan to pay off its debts and satisfy its creditors. Think of these classes as different groups of people at a party. Each class represents a different category or type of claim or interest. In Class 1, we have the other priority claims guests who hold a different status. They must all be paid in full in good old-fashioned cash, with no room for compromise. Unless they willingly agree to a different treatment, it's all about the money, honey. No voting rights here. It's a straightforward deal for them. In Class 2, entering the scene are the secured claims guests, all seeking their fair share. They might have some collateral to back up their claims, making them feel secure in this unpredictable world. Depending on the plan administrator's discretion, they could get a choice of treatments. It's like a menu. They can either feast on cash, receive the collateral itself, or just have their claims untouched, as if they were the VIPs of the party. Next up in Class 3, we have the separate subsidiary claims crew, who have their own unique demands. Like the other priority claims folks, they also get their payment in full and upfront, just like receiving a delightful cash gift. They are quick to accept the plan without any voting. They know a good deal when they see one. In Class 4A, we welcome the trendy .com Customer Entitlement Claims Squad, representing the modern digital age. They've got some unique demands, and unless they agree otherwise, they'll each receive their share in cash from the .com customer pool. These guys get to vote, allowing them to make their opinions count, like deciding the best playlist for the party. Now we have the U.S. Customer Entitlement Claims in Class 4B folks who want their share of the American dream. They also get cash from the U.S. customer pool, proportional to their claims. Like the .com crew, they're also voters, making them active participants in this financial democracy. Here comes the tech-savvy Class 4C, the NFT Customer Entitlement Claims team, representing the exciting world of non-fungible tokens or NFTs. They get to exchange their allowed NFT customer entitlement claims for actual NFTs. It's like receiving rare and valuable collectibles as a reward. In Class 5, we have the General Unsecured Claims Gang, who are like the partygoers with general invitations. They receive their payment in cash based on the priority set by the waterfall. It's like getting your fair share from a majestic fountain. In Class 6A, which comprises all .com convenience claims, each holder of an allowed .com convenience claim will receive payment in cash equal to a certain percentage of their claim. This payment will be made either on the initial distribution date or shortly after the claim becomes allowed. The payment is given as a final settlement, release, and discharge for the claim. However, the total cash received by holders of .com convenience claims cannot exceed a specified amount. Claims in Class 6A are considered impaired, and each holder has the right to vote on accepting or rejecting the plan. In Class 6B, we have the U.S. convenience claims. These are like the partygoers who are owed money by the bankrupt company for services that made their lives more convenient. They have the power to vote on the bankruptcy plan, just like deciding which song to play next at the party. Class 6C is similar to 6B, but it includes general convenience claims from people outside the U.S. It's like a mix of partygoers from different countries, but they still have the right to vote on the bankruptcy plan. Then we have Class 7, which represents the debts and claims between different entities within the bankrupt company. These are like the partygoers who owe each other money or favors. Their claims will be canceled, so they won't receive any distributions or property. Class 8 includes the ownership stakes or intercompany interests between the different entities. It's like the partygoers who have ownership in the company, but their interests will be canceled and they won't receive any distributions. Moving on to Class 9, we have the subordinated claims. These claims are like the partygoers who have lower priority when it comes to getting paid back. They'll receive a share of the general pool distributions unless they agree to less favorable treatment, like skipping the snacks at the party. Class 10 represents the FTT claims, which won't receive any distributions and will be canceled. It's like the partygoers who aren't going to get anything from the party, so they might as well go home early. In Class 11, we have the preferred equity interests. These are like the VIP partygoers who usually get special treatment and preferential treatment when it comes to receiving distributions. But in this case, they won't get anything and their interests will be canceled. Class 12 includes the Section 510B claims, which won't receive any distributions and will be canceled. It's like the partygoers who were hoping to get something, but unfortunately they won't. Finally, in Class 13, we have the other equity interests. These are like the partygoers who have interests in the company that don't fit into any other category. They won't receive any distributions and their interests will be canceled, just like being told there's no more cake at the party. When a company goes bankrupt, it may owe money to a lot of different people. But what happens if the company has already paid some of those people? Well, in that case, the bankruptcy administrator can ask those people to give the money back. It's like if you accidentally paid your friend twice for the same dinner, you'd ask them to give the extra money back. The bankruptcy administrator can also ask people who are claiming money from the bankrupt company to prove that they haven't already been compensated for those losses in another legal proceeding. This is to make sure no one is getting paid twice for the same thing. It's like if you got into a car accident and already received money from the other driver's insurance, you couldn't also sue them for the same damages. In order to get paid from the bankruptcy process, the people who are owed money may have to give up their right to take any other legal action related to the bankruptcy. This is to prevent them from double dipping and suing for more money later on. It's like if you signed a settlement agreement with someone and agreed not to take them to court in the future. When distributing payments to creditors, the bankruptcy administrator has to comply with tax laws and may have to withhold taxes from the payments. It's like when you get your paycheck and a portion of it goes towards taxes. Claimants who are eligible to receive payments under the bankruptcy plan have to provide certain information, like tax forms and identification, to the distribution agent. If they don't provide this information within a specific time frame, they may lose their right to receive any payments. It's like when you apply for a loan and the bank asks for your financial documents. If you don't provide them, your loan application may be denied. There are also procedures in place for objecting to claims and estimating the value of claims that are in dispute. The bankruptcy court can determine the value of a claim if the parties can't agree, and that estimated value becomes the maximum amount that can be paid to the claimant. It's like when two people can't agree on the price of an item, so they ask an expert to give them an estimate. Claims that have already been paid or resolved as part of the bankruptcy plan can be adjusted or removed from the list of claims without going through a formal objection process. It's like when you return an item to a store and they update your receipt to show the refund. Next, we have the distribution of assets. This is like dividing up a pizza among a group of friends. The assets of the bankrupt company will be distributed to different parties according to the plan. It's like making sure everyone gets their fair share of the toppings. Now let's talk about the discharge of the debtors. This is like being declared innocent in a court case. The debtors will be released from their debts and liabilities, and they can start fresh without any financial burden. It's like wiping the slate clean and getting a second chance. Moving on, we have the treatment of executory contracts and unexpired leases. This is like renegotiating the terms of a lease or contract with a landlord or vendor. The parties involved can agree to new terms that work for everyone, or the contracts and leases can be terminated altogether. It's like finding a win-win solution that benefits both sides. Next, we have the designation of certain claims as administrative expenses. This is like putting certain bills at the top of the priority list. These claims will be paid off first before any other creditors receive their share. It's like paying your rent or mortgage before you splurge on a shopping spree. Then we have the preservation of certain rights. This is like keeping your favorite possession safe and sound. Certain rights and claims will be preserved and protected even after the bankruptcy process is over. It's like having a safety net to fall back on if needed. Finally, we are looking to gather and market the assets owned by the debtors. Our main goal is to benefit the FTX.com customer pool during this competitive process. To achieve this, we are exploring different options. One possibility is to collaborate with third-party investors and establish a new company in a foreign jurisdiction called the Offshore Exchange Company. This new company will operate an offshore platform not accessible to U.S. investors. Alternatively, we may consider a merger or similar transaction with another entity. Instead of settling all debts in cash, we are contemplating providing the FTX.com customer pool with non-cash consideration in the form of equity securities, tokens, or other interests in the offshore exchange company. These benefits will be distributed pro rata among the holders of .com customer entitlements, taking into account applicable securities and other laws. However, I must keep in mind that proceeding with the offshore exchange company could have potential drawbacks. It might delay the effectiveness of other components of the bankruptcy plan, raise regulatory concerns, or fail to deliver substantial incremental value to the .com customer entitlement holders. Therefore, we need to carefully evaluate all aspects before making a final decision. Additionally, I am considering establishing the FTX Ventures Trust, a new limited liability trust company. Its purpose will be to hold on to our illiquid venture capital, private company, and token investments that are not being sold immediately. The FTX Ventures Trust will make cash distributions based on the time horizon determined by the nature of these investments. However, we have not yet decided whether this trust will be owned by the wind-down estate or traded separately. So there you have it. I've broken down this legal document with metaphors using Podfast that hopefully make the concepts more tangible and relatable. This bankruptcy can be overwhelming, but by understanding these key concepts, you'll be better equipped to navigate the process. If you enjoyed this content, please like and subscribe. See you next time.